Welcome to Pencils Down, a Finalis podcast. This is a show for listeners wanting to learn more about the ins and outs of the private securities brokerage landscape. Each episode will feature insightful conversations with the world's leading investment bankers, placement agents, capital providers, startup CEOs, and more. And with that, let's get into the show. Graeme Woods, thank you so much for joining us here on the Pencils Down podcast.
You're welcome. I'm happy to be here. Happy to be a part of this.
No, very much looking forward to this conversation. Just a way to kick things off. I usually like to start by asking our guests to share a little bit about their backgrounds and their eventual paths into investment banking. What characterized that path for you?
My career began when I was a teenager working with my dad. He worked on mining and development projects in Western and Southern Africa. And he was a bit of a serial entrepreneur. And I think I caught his bug early on in life. And I gained a lot from the experiences working with him. They kind of defined who I am as a businessman, and they kind of defined some of the goals and values that I try to bring out in my own business. My first business acquisition deal happened through my father's business. It was a joint venture in South Africa, the purchase of a steel mill and some property. And I have to say, the path that I took today came about from three different routes from there. First, my experience in business development. Second, my experience in personal finance and real estate and insurance and in my investment advisory. And then third, I had a short detour in my life in the U.S. Army Reserve. There, I served as a civil affairs sergeant and parachutist. I had one deployment overseas in Bosnia. Civil affairs there involved peacekeeping activities, which kind of meant coordinating resources, liaison between the military and civilian population, and coordinating humanitarian assistance. I had the opportunity to work on some economic development projects in that emerging market economy. And you haven't lived until you've cut deals while dressed in camouflage and wearing a pistol on your hip. So that's a lot of fun.
That's an immediate form of leverage.
Yes. Well, I tried not to make it be. We actually they issued us pistols and M16s, and my team, we like to leave our M16s back at base because we didn't want to scare people, because we're trying to make friends. But it was interesting. While working with my dad, I eventually found myself working on a program sponsored by the Overseas Private Investment Corporation. They had a program called the Enterprise Development Network, and it was technically my first government contract, though the government didn't actually pay me. I was contracted as an originator for OPIC, where I would identify deals and opportunities that involved foreign direct investment by U.S. small and medium-sized enterprises. And then those companies would pay me to help them assemble the OPIC application package. I worked on deals mostly targeting Western and Southern Africa. Those are the areas where my dad was working, and so that's kind of where I developed my experience and expertise. The clients were U.S.-based sponsors or small businesses. My work involved a lot of consulting on startup businesses, and I found that they had similar issues to overcome. Without fail, almost every client had personal finance issues that needed to be resolved before OPIC or any bank would look at their project. This is where I first saw the connection between business development and personal finance as part of my growth path. My second path in the career led to real estate sales. And even today, I'm a commercial real estate agent. I started real estate in 2005 during the boom, shortly before the bust. And then in 2007, you remember our world fell apart. We went from deals that were just walking through the door. So a client would come in the door, say, I want to buy a house, and bang, commission check. It's that easy. To I had to learn the ins and outs of short sales, consult on credit repair, and then I actually had to learn how to go out and prospect for business. God forbid, I actually had to do work at that time. Foreclosures were at an all-time high, And I felt that the real estate advisors of that time failed clients. And I'm talking about the agents, the brokers, the CPAs, the attorneys. They all failed them. Real estate agents are transaction focused by nature. They don't care what happens to the client after the sale. The only thing they really care about is if 2 years to 5 years down the line there might be another sale. They want to stay in contact, but other than that, they don't care what happens to the client or their house, and they don't care what it took for the client to qualify to make that purchase. I felt that things had to change and that there had to be a way to build relationships with clients to help them with finance before, during, and after the transaction. So I started my first investment advisory firm to provide insurance and financial planning services to my real estate clients. That was in 2010. I didn't realize at the time, but I wasn't the only one formulating a method to combine personal planning and business transactions. So fast forward to this time last year, I had just completed the Certified Exit Planning Advisor program. I was so excited because these guys had put down in writing everything I was thinking about. Business value acceleration, which was consulting meant to prepare the business for exit or financing. Personal planning and gap analysis that acknowledges that the business owners see their businesses as their main asset, their retirement plan, and their estate plan. And business owners have this asset in place, but they don't know how to achieve the liquidity they need to fund their financial plans. So, as soon as I completed the program, I decided to revisit the idea of deeper engagement in business planning with that process. So, I wanted to go back to something similar to what I was doing with OPIC, but bring in financial planning for the business owners.
So just curious to dig in there. I think that there's a couple of areas there that you touched upon that I think deserve a little bit deeper exploration. The first is the Africa focus. So I'm just curious, where did that come from? The initial exposure to business development and personal finance issues that you were confronting on the African continent.
How far back do you want to go? It's the way my dad brought me up. So my first experience with Africa really was when I was about 3 years old. Actually, two. He moved. My whole family moved to Liberia, where he volunteered for overseas to help train entrepreneurs in business development. That's why we wound up in Western Africa, in Liberia. And while he was there, he's entrepreneur. So he made a lot of connections, did the exploration of the economy and industry. That's what he did naturally. And he discovered a couple of times they showed him places where there's need for development, but they don't have the resources or the training to make that happen. One of them was he was shown a mining site where it was just a hole in the ground where it was a gold mine, all of the gold was removed, but then there was nothing replaced. It was just a hole in the ground. When it was completely empty, the companies picked up and moved out, and then the country we were in. He actually went to the Republic of Guinea to see this. The country, they were left with nothing, so they got very very little of the profits from the extraction of their natural resources. So that's kind of where he got into that business. He decided that well, let's help use these natural resources, but leave some of the benefits in Africa with the people who own the resources. So he started a joint venture with the Republic of Guinea to set up a mining company.
It seems to be quite far reaching in the sense that it wasn't until really just the last 3 decades that international development and the promotion of the stimulation of the private sector as a means to develop emerging frontier economies has been in vogue. So clearly your father was on the cutting edge or the bleeding edge of how we think about international development, which is to promote job creation and the stimulation of the private sector in countries like Liberia. Your father sounds like a fascinating figure in that sense because he was clearly cutting his own path.
Yeah, he was an impact investor before we knew about impact investing.
And then, as it relates specifically to this observation that you had around business development and personal finance, and really the fact that it's not an either or, this is an integrated or holistic approach. Perhaps you have an anecdote that you might share about family circumstance that you witnessed that really brought home to you this sense that, hey, you really need to come to the table as a financial advisor with a more holistic lens as it relates to family finances and business development.
Yeah, I had several clients, but one was notable, and I have to be careful about everything I say because this was on the financial planning side, and I don't want to give anyone away. Their spouse had passed away, and their spouse was running a business that was very successful. They had contracts in place with schools and government agencies to continue to operate this business. But the problem was, it's one of those businesses that depended solely on that. And this client came to me. Actually, her boss came to me and asked to set up because they wanted to make a gift to her to help ease some of her pain, to work with her. But when she came to me, she talked about, is there anything that I can do to help save this business, because it's got contracts and we've got money coming in and everything, and there was nothing done in terms of she had on her personal financial stuff. She was set. I was impressed. She thought ahead, looking at the retirement plans and everything. Her kids were in school, had graduated, but when it came to this business, there was nothing done on the estate planning side, and then on the business planning side to make sure that it will continue on to help support that family. So that was one of the things that this was before, several years before the pandemic, but it got me thinking again back into, what, I really have to do something about this gap in the separation of corporate finance and personal finance when it comes to small and medium sized businesses.
It makes perfect sense. And it's remarkable to me that financial advisors and investment bankers have only recently, it really feels like within the last 5 to 10 years, you've started to see a convergence, especially in the lower middle market of investment banking and financial advisory, where there's a recognition that single family offices, high net worth individuals are really looking for a one stop shop. They're not necessarily looking for a large portfolio of financial advisors to support them, but they're looking for a financial advisor that can support both sides of their business or of their wealth management. So it does make perfect sense. I realized I sidelined you on those questions, but to me, I was just curious to see kind of how some of those early experiences informed some of the decisions that you made, and in particular as it relates to the ultimate formation of GS Woods back in 2016. And I would love to learn a little bit more about the initial thesis that led you to form GS Woods, and to share with the listeners what that journey has been like for you.
So somewhere in between when I started that first registered investment advisory firm and GS Woods, I took a detour into, I started working for a large insurance company selling life insurance. And then I was also registered as a investment advisor representative doing financial planning. And the reason I did that was because I realized I needed more training, not just sales training. Sales is always the most difficult part for an entrepreneur, but I wanted to be better at working with the tools that financial advisors use to help clients. So I felt that with them, I can get some of the insurance and securities training, but also how to be an advisor to clients. Through that process, I really bought into but I identified closer to with the goals planning, helping clients achieve goals, whatever goals they're looking for, as opposed to, oh, I can get you this return on investment. How about I can get you to help pay for graduate school, which I was able to do. I put a client, she put herself, but I helped the client pay for graduate school to make the next step in her career. So when I left that company, and that's when I started GS Woods, because I felt I had learned enough, and I really didn't like the idea of pushing a single product on people, no matter what problems they had. I had people that were I had prospective clients that were running businesses that had issues with workman's compensation, and I ended up trying to sell them life insurance and disability insurance, and never answering their question about workers' compensation. So it gets to a point where, if you want to really help people, I feel you got to go independent, set up the practice the way you think it should be set up, so that when I'm talking to people, I'm talking to them about coming up with solutions for the problems that they're dealing with financially every day.
What's interesting there is that on your website you talk about delivering a more holistic approach to investment advisory, where what you're focused on doing is really understanding people's goals. The goal rarely is just a number, right? It's more than that. So to a certain extent, you are almost like a psychologist, right? Really trying to understand, what is it that you're trying to achieve, or what outcome are you looking to optimize for? And then another thing that you said that was, I found to be very interesting, is that you're kind of connecting that observation with the need to go independent, right? Which is what GS Woods is a reflection of that, this desire to go independent so that you can reinforce this more relationship driven approach. To what extent do you think that relationship driven approach is just harder to achieve within a larger organizational context, that it's just easier for you to get there in the context of launching your own platform?
The larger firms, they have sales requirements, they have production requirements that need to be met, and they have certain types of products that they need to sell. So whether broker dealer type financial advisors, where they have minimum asset requirements, so you can't talk the clients that don't have more than $250,000 or more than $500,000, they can't be serviced by this particular broker dealer. And then there's the insurance broker dealers, where their main focus, they're only broker dealers because they have these variable products that they want to sell, and their main focus is selling the insurance products that they have, not necessarily the investment products that they have. Or if you're talking about the bank type advisors, where it's more about opening up the accounts, because the main goal of the bank's goal is to have accounts open. I'm talking about commercial banks, open up those accounts. I think that I fit in, where I can talk to, as an individual, independent advisor. I can talk to whoever I want. I don't have to have minimum asset requirements. I can ensure that I get the revenue based on maybe my pricing strategy for the different fees that I serve, or the different products that I choose to work with. So on the insurance side, I'm a broker. I can work with different companies to get the products that my clients need. Now, it's not as easy building the relationship, because in this market, clients, they're used to the way it's been. So when you come to them saying, "Yeah, I'm not trying to push any type of product on you," they don't really believe you. I found, especially when I'm talking about, when I'm working on a financial plan, and we start going into the risk management section, and we're talking about insurance, and I talk about, well, what types of life insurance policies that should they be looking at. I get, sometimes they start to tense up, because they think I'm trying to sell them insurance, but I'm not really trying to sell you an insurance product. I'm trying to sell you on insurance to help protect the rest of this plan that we're working on.
That's fascinating, and I could see how that model would resonate. It certainly resonates with me because, if you think about, some of the most important financial decisions you're going to be making and the type of advice that you're giving, you want to make sure that your advisor is completely, kind of agnostic to what you ultimately choose, because that advisor is so focused on, delivering results for you on the basis of your objectives.
I'm able to set up a plan where I always tell them in the beginning, I'm going to put together this plan and there's going to be investment recommendations on your portfolio, but you can implement this plan with anybody. It doesn't have to be with me, even though I prefer it because I want the fee income.
Oh, certainly. And how have your prospective clients and your existing clients responded to this relationship driven approach, this more holistic approach to financial advisory?
It depends. Each one is different. Some of them have really embraced it. I've noticed it is usually the more entrepreneurial clients who are trying to solve their own family and business problems that are like, oh yeah, I can take it. I can use your services to help answer these questions. I don't get a lot of comprehensive planning, but I get clients that become financial planning clients that come for individual consultations. So they may say, hey, you know what? I want to talk about my business now, but I'm also in next year, I want to buy a house. Can we do that? Can we talk about that next year in a separate engagement? So I get that clients just coming back. And sometimes those are my favorite clients because I get to see each little aspect of their plan come to fruition. And when they're coming back, I know they're happy with the work I've done.
No, it's fascinating, and it's clear to me that you've been able to stake out a very authentic path for yourself and GS Woods as it relates to the approach that you're taking as you're reaching out and building your customer base. I'm just curious, looking back now on this journey, since you launched, your platform, what practical or actionable advice would you give to somebody looking to set up their own investment banking or investment advisory business?
Well, my advice is for advisors to consider what type of lifestyle they are they want to have in the future. A lot of this business, and even in real estate and insurance, uh, they follow the policy: you eat what you kill. And that's a hard way to do business, and that's a hard activity to keep up for years and years. You're always prospecting, you're always selling, you're always closing. Building relationships means that I'm going to have that client that keeps coming back, so I don't always have to eat what I kill. Sometimes you're just a part of the success. You're working on the success of your clients. So the goal here for me is to build a business that has reoccurring revenue. When my wife convinces me to take a vacation, I can take off a few weeks and I don't have to worry about the business falling apart. I'm making money and my money's making money. There's also a risk management strategy for the way my business is set up. I've diversified my revenue sources so that when the market is down in one area, I just switch over and focus on another aspect of my business. So if we have a potential recession coming up, if everything completely goes downhill and we have 2007 again, well then I can start talking to people about another, maybe just start dealing with insurance and other risk management strategies to help protect them and get them through this upcoming economy. And I also shift my marketing and sales strategy to focus on those places where the market is up. Just to protect your business, you want many clients. You don't want to depend on a few. You want to diversify revenue streams, as I said before, with related service lines. So all of my service lines are interrelated. Otherwise, I'd drive myself crazy trying to learn insurance and securities business. And my service lines are financial planning, where I focus on exit planning, estate planning, and business continuation planning, insurance and risk management. So I'm licensed in health, accident, property, and casualty insurance. I'm also a chartered life underwriter. Commercial real estate, because many family enterprises own real estate as their core family business. And lower middle market mergers and acquisitions and raising of private capital.
I wanted to kind of double tap on the last thing you mentioned, which is obviously the investment banking aspect of your portfolio, which is ultimately what brought you to Finalis in, I believe, April. It's been almost a year. Time flies when you're having fun, Graeme.
Yeah.
And curious, first of all, just to get your observations on what you've observed in your on the investment advisory side of your business with respect to interest in alternative investments. And to what extent do you think that there is a growing interest in alternative investments on the part of your clients?
Prior to the pandemic, which is when I really shifted my business focus from just mostly personal financial planning to planning for owners and their businesses, the talk of alternative investments really had to do with adding that as into your portfolio, into your managed account, or into your retirement plan, as a way to manage risk in your portfolio. This is a little bit different because we're talking about more sophisticated investors that are dealing with either larger sums of money or different risks that they're trying to manage. I think that the interest in alternative investments is high for the clients that I'm targeting, and they're still doing the same thing. They're still managing the risks in their portfolio, but in more direct investment into real estate or into private companies.
It makes a ton of sense. And since you kind of decided to take the leap into this investment banking side of the business, share a little bit about what that journey has been like. I know that you've been active, for example, in the Finalis marketplace
Mm-hmm.
and in interactions with other Finalis affiliated investment bankers in the network. Curious to learn more about the potential opportunities that you've come across since you've started your affiliation at Finalis.
Yeah, as a relatively new banker, the marketplace is great for me. It's a learning tool. It's a golden opportunity to identify experienced bankers that can help me in my deals with like minds who like to collaborate. Some of my current deal flow and management processes are being developed through the talks I have with the other bankers on the platform. And I also consider the marketplace as a marketing tool I have available when I'm talking to clients. Because now I have this huge network of highly experienced bankers who are specialists in different industries who might be interested in supporting the deal. So I can go in, I can be agnostic in the industries that I work in, but I can tell them, yeah, well, we can build a team around for your deal that have specialties in whatever you're talking about. I also have with the marketplace, it's discreet and exclusive, so I can tell clients that, you know what, before we go out, let's take a look to see if one of the bankers on the marketplace platform might be able to help finance this deal or might be interested in investing in this deal. And then in building the selling groups and syndicates, I have a source of pre-vetted bankers, which is great because then I can control the way the deals are marketed and how they're talked about. This is a risk management strategy for me and for my clients. So I use that incentive, the risk management strategy, as to get clients to sign the exclusive engagements with me, because now we can control the story about their business and how it's getting out there.
It's really exciting to hear that, Graeme, and I think it's a strong validation regarding what ultimately led us to launch the Deal Flow product and the marketplace environment, which was really just around finding ways to, on the one hand, give you as an investment banker all of the freedom, autonomy, and creative license that you want, but on the other hand, give you access to leverage. And an important source of that leverage is access to a network, and a network that might be in a position to augment the way in which you're able to deliver value back to your clients. So we're still in the very early days of manifesting this vision, but it's exciting and heartening to hear that even just over the course of the last year, you've been able to take advantage of what we've built.
It's a fascinating thing you have here, and I'm excited to see what's coming next.
Certainly. And speaking of what's coming next, I was curious to hear, what GS Woods' plans are for this coming year. Is there anything that you want to plug?
Well, there's some exciting things that have happened in the past year that I can say that makes me feel like my future is bright. So last year I was able to sign my second government contract, but this time they pay me with a with a public pension. And what's exciting, I'm actually a subcontractor, but it's exciting because I get the experience and I get to build a reputation in government contracting so that I can go for the bigger contracts. This firm, I'm actually subcontracting with an actuary firm, which is interesting. They needed help with on the financial advising side of dealing with the interest rate assumption for pension plans. One of the goals I have with this business is to target, like, go back to my roots that we discussed with about where I got from my dad, and I want to target more disadvantaged businesses that don't have the same access to capital. So I have in my family, it's not believable, but not everybody followed my dad's footsteps. So I have a lot of engineers and scientists like my wife, and they have ideas, but they don't always make it to market because they don't have the same access to capital. So I want to be the one to reach out to them and other people, women, people of color throughout the country that have these engineering and scientific ideas that need to bring them to market to finance them. I want to be the one to open up that access for them. So that's one of the goals. And then in the back of my mind, I've always had my dad's goals in Africa. And so one of these days, I don't know when it's going to be. It's not going to be this year, but I'd like to revisit some of his projects.
Well, those are both incredibly noble objectives for the coming year. And I think that, those who will stand to benefit the most are obviously your clients as you continue to build out this platform. I can speak, on behalf of Finalis. I mean, we're just incredibly excited to continue along this partnership, Graeme. Really wish you all the best in this coming year, and very much looking forward to continuing the conversation and the partnership in the days ahead.
It sounds good. Thank you.
Thank you so much. Finalis is a broker-dealer platform with everything that M&A advisors, investment bankers, and placement agents need to succeed. We deliver a broker-in-a-box regulatory affiliation solution, replete with tech-enabled compliance, research and analytics, deal lifecycle management tools, and a first-of-its-kind deal marketplace. Learn more at www.finalis.com. You've been listening to Pencils Down, a Finalis podcast. Keep connected with us by subscribing to the show on your favorite podcast player. If you like what you've heard, please rate the show. That helps us keep covering the latest in the private securities brokerage landscape. Thanks for listening. Until next time.